Hello, Charleston, and welcome to this week's edition of Navigate Your Wealth, brought to you by the team of 𝘄𝗲 Financial, based right here in Charleston. I'm your host, Kristen Oakley, and joining me in the studio, we have the founder, Karen 𝘬𝗏𝗍, and her beautiful daughter, 𝘵𝗵𝗏, who is the president. And today, we are going to talk about how 𝘄𝗲 Financial can set you up for success in retirement. If you want to know how you can be excited about what's going on in the markets, no matter what's happening out there in our crazy world today, you're not going to want to miss today's show. Karen and Sam, it's great to be back with you.
Wonderful to see you.
Being here.
Thank you. My pleasure. I look forward to this time every week. It is such an honor to get to serve Charleston with you. And the reality is we are making history, but not always in the best way possible when it comes to what's happening out in the stock market and what's going on in our world today. There's a lot of fear. There's a lot of uncertainty. Also because it's an election year. There's a lot of trepidation about what's going on out there, but I know that you are passionate about helping every person that you speak with have a sound financial strategy and a plan in place so that they can be confident no matter what is happening out in the market. So let's talk about that today.
Well, confidence is really the key. You know, you work your whole life to enter into retirement, not so that you can worry for the next 30 years, right? Work for 30, worry for 30, that doesn't work.
Right.
So what we have seen, obviously, over the last 2 years has been, just first in history, right? We saw the worst stock market since the Great Depression.
Right.
We saw the second worst start ever in 2022. We saw the worst bond market since 1982 as a result of the government's, infinite wisdom trying to slow down the economy, raising interest rates.
Right.
We had the first European war in 70 years, and the first time in history, again, because of interest rates rising and all of this other trepidation, that both stocks and bonds went down. And so here we are now. It seems like the market's starting to come back a bit, but I would ask those who are watching, how does your portfolio look today? I'm sure a year ago it was worse, but if you still have not recovered, and even if it has recovered, is that really what, floats your boat? In 42 years, I've seen a lot of market changes.
Yes.
I've seen, 80s and 90s, the market only went up. I've seen days when the market went down 1,000 points. The lost decade from 2000 to 2010, they call it the lost decade because it started and finished at the same place. It started off down, then it went up, then 2008 dropped it back down again. And so the thing that you need to understand is a lot of clients at that time said, my 401k has gone to a 201k and it's on its way to a 101.5. Like, that is not the kind of retirement that you should be having. And we want to be able to help the viewers have better confidence and better options, not to have to suffer that.
Absolutely. And yet, we can't not deal with the markets, right? I mean, they are a necessary part. And so talk about that, because I know that you all are very systematic in your approach with folks and helping people navigate market volatility as best as they possibly can.
When you think about the market, I think people have a bit of a short-term memory. When the market is going up, you're excited about it. And you're like, yep, I want to be in it. And then when the market goes down, naturally, you're like, I need to get out. I need to get out. The problem is emotion is the thing that is dictating where you are in the market. And that's not fair.
Right.
You're human. Your emotions are going to take over. Our job is to help you remove the emotion from it.
Yes.
It doesn't mean that it's not personal. It just means that we want to put systems in place to give you the opportunity to succeed. If you are worried about running out of money, you are not enjoying your retirement.
No.
And if the market is the thing that is keeping you up at night, then you're not having a worry-free retirement, which ultimately is our job. We want to make sure that the market becomes something that empowers you, not the thing that derails your joy.
Yeah.
No, I was just going to say, you know, when you retire, everybody has a to-do list, an activity list, and so worrying about retirement and worrying about running out of money are two things we tell our clients we do not want them to have on their activity list.
Right, you want them to have that worry-free retirement. You know, as you both were talking, I was reminded of the analogy of a roller coaster. A lot of folks love roller coasters, maybe when they're younger, but as they get older, they're like, yeah, I might bypass that crazy one over there. That's a lot of what being in the stock market can feel like for folks. And yet, I know that the people that you work with are able to achieve this worry-free retirement. So I want you to share a little bit about how you've been able to help your clients be excited about the market no matter what's going on out there.
We have this saying, and we say, your money has job descriptions. This is something that isn't really taught, but it really should be the conversation that everyone is having. The truth of the matter is, your money can only do one of three things. It can grow, it can provide income, or it could be liquid. It cannot do all three. It can't do two things at the same time, or it cannot perform most optimally. If you need your money to grow, then it's in the stock market. But if it's in the stock market and the market goes down, then you have to sell at a loss. That doesn't feel good. We want your dollars to have a clear job description so that every dollar can work for your advantage.
And that's the key, right? Is when your money has a specific job description and you've assigned it to do what it was intended to do, that just frees up so much of that worry.
Well, it's absolutely the truth. And as Samantha said, job descriptions of money is something that should be taught early on when you start saving and investing, but it isn't. And the reason it isn't talked about is because the accumulation phase and the distribution phase are completely different animals. The rules that you focus on during the accumulation phase are very, very different than the rules that are in the distribution phase. We have a client that came to us and she was in the market and she had a systematic withdrawal. Again, I did this in the 80s and 90s. The systematic withdrawal, just so people understand, is when you have a portfolio, maybe a diversified portfolio, a mixed blend of stocks and bonds, and whatever rate of return that you're getting, the amount that you're withdrawing theoretically is less than the amount that you are earning. So this particular client had her money in the market. Sad thing was, the amount of money that she was taking out of it, when we did the math for her, which is very simple, monthly distributions times 12 divided into the portfolio was 10%. She had no idea. And how the advisor she was with allowed her to take that big of a withdrawal was mind-blowing to us. And it took us a really long time to help her understand why taking 10% wouldn't work. During a few years that she was with this advisor, she was getting 10% or more, so it did work.
Right.
Just like I said, in the 80s and 90s, it worked when it worked, and then when we hit the brick wall, it doesn't work.
Didn't, right.
Well, fortunately, we were able to help her truly understand. We split off a portion of the invested assets and put it into a guaranteed income annuity, which gave her a higher payout than what the safe withdrawal rate was. So she got more income from that, and then the other money was able to remain in the market and stay invested because the risk was different now. She wasn't asking it to do two things.
In that example, it's really important to point out, she was asking her money to grow because it was invested. She was also asking her money to give her income. That's a perfect example of asking your money to do two things. If you are asking your money to do more than one thing, to do more than the job description one at a time, growth, income, or liquidity, pick up the phone now and give us a call. We want to put together your retirement roadmap so that you have a clear picture of what all of your dollars are doing and the jobs that you are giving them. When you give us a call, in that retirement roadmap, we are going to look at your assets. We're going to give them those job descriptions, but we're also going to do a few other pieces. We're going to do a Social Security analysis. Again, it's all about maximization. We're going to do a tax burden analysis. We want to figure out how you can pay the least amount of tax legally possible over your lifetime. And then more than anything, we are going to give you the time that you need to have confidence in your retirement.
Sam and Karen, thank you so much. To our viewers at home, to be able to reserve your opportunity to meet with Karen and Sam and claim your complimentary retirement roadmap. Again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how they can help and serve you. All you need to do is call that number on the bottom of your screen, 855-348-3073. Or if you'd rather not talk to someone right now, but you do have your smartphone handy, you can simply pull it out, open up that camera app, and point, click, and scan that QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Compass Financial will reach out to connect with you to schedule your complimentary consultation that way as well. Don't go anywhere. When we come back, we're going to be talking about some more strategies to help you not only protect your portfolio, but to help put every dollar to work for you so that you can win and experience a worry-free retirement. Stay with us.